Benzinga Pro? Let's have a look.
In April 2025, a financial news service published a story about a possible 90-day pause on tariffs. The stock market moved. The story was false. The company blamed a post on social media. This is a news service that charges up to nearly $200 a month, specifically because speed and accuracy matter when money is on the line. Its entire value proposition is being faster than free alternatives and reliable enough to trade on. That incident tested both claims simultaneously, and somewhere in the same platform, paid promotional content about stocks sits in the same newsfeed as editorial reporting, disclosed in the fine print, delivered at the same speed. In the same window, a momentum trader is scanning headlines and making decisions with real money. The speed advantage is the product. What happens when that speed delivers the wrong information is the question the subscription does not answer. The founder graduated from the University of Michigan in 2000 during the first internet trading boom. He spent the following decade watching the gap between institutional and retail financial news. Institutional terminals cost $24,000 a year. Cable television served the mass market. Between those two, active retail traders had no real-time news service tuned specifically for momentum trading at a price they could justify. Benzinga Pro launched in 2010 from Detroit. The thesis was professional speed financial news for retail traders at retail prices. The company bootstrapped for over a decade, funding itself through advertising and early subscription revenue. In October 2021, a private equity firm acquired a majority stake at a valuation of approximately $300 million. The founder stayed as chief executive. The prices went up. The platform aggregates over 1,000 news sources with a claimed speed advantage of 5 to 15 minutes over institutional terminals for retail-relevant events. An audio feature reads breaking headlines aloud so traders can monitor news while watching charts. Earnings calendars, regulatory decision dates, and economic event schedules are genuinely useful for traders who need precise timing on catalysts. The free tier provides basic news, market movers, and a calendar. The basic tier adds real-time news, the audio feature, and alerts. The top tier, at nearly $2,000 a year, adds an intelligence layer, launched in 2025, a proprietary signal ranking system, a real-time scanner, and 7 chat rooms. Those premium features have not been independently validated against cheaper alternatives that focus on a single function rather than bundling everything into one subscription. The April 2025 incident is not the only documented speed failure. In August 2023, a biotech stock gapped on news, and the platform's alert arrived approximately 5 minutes after the movie had already happened. For a momentum day trader paying for speed on exactly this type of event, a 5-minute delay on a gapping biotech stock means the entire price movement occurred before the subscriber knew about it. In February 2026, a news alert on a politically sensitive story came roughly a minute after other sources. Neither delay involved verified financial losses, but both demonstrate that the speed advantage the platform sells is not consistent across all event types. The April 2025 tariff story is different in kind. The earlier incidents were about being late. This one was about being wrong. An investigative outlet reported that the company published a story sourced from a social media post without adequate verification. Markets moved on the headline. The story was retracted. The company's explanation was that the false information originated on social media. A professional financial news service that charges nearly $200 a month published unverified social media content as market-moving news. The question is, what happens when a service optimized for speed prioritizes being first over being right, and the people paying for that speed are making trading decisions in real time based on what the service publishes? Professional traders consistently describe the platform as useful for speed on specific event types like earnings and regulatory decisions, but not a replacement for wire services when it comes to complex financial reporting. It is a supplement, not a primary source. The 14-day free trial is the most generous in the comparison group. Monthly subscriptions are non-refundable. The platform operates 2 content streams through the same feed: editorial news researched and written by the newsroom, and sponsored articles paid for by companies seeking promotional visibility to the platform's subscriber base. Both are disclosed. The sponsored content carries a label, but both arrive in the same real-time feed that subscribers are paying for because it is faster and more signal-dense than free alternatives. For a momentum trader scanning headlines at 9:30 in the morning, the practical question is whether the sponsored content label is visible enough to prevent acting on a promotional article before registering that it is paid placement. The community has described the effect as promotional content drowning out legitimate regulatory filings and material corporate announcements. A trader who opened the platform specifically to catch a filing faster than competitors finds that filing buried under press releases from companies that paid for placement. The business model explains the tension. The company earns from subscriptions, from advertising on the free website, from sponsored article placement, from an annual industry awards event, and from data licensing. The private equity acquisition in 2021 brought growth expectations that are visible in the pricing structure. The basic tier is roughly $37 a month. The top tier is nearly $200. The gap between those two tiers is where the post-acquisition revenue optimization is most obvious. The sponsored content revenue creates a structural conflict between the platform's role as a curated news source and its role as a distribution channel for companies willing to pay for visibility in a feed that traders trust. The options activity alerts included in the platform are basic compared to dedicated flow tools. For serious options, flow analysis, the platform in this series that aggregates the full consolidated options, tape, is more appropriate. Benzinga Pro is a news tool with options features, not an options tool with news features. The distinction matters when deciding what you are paying for. Benzinga Pro for anyone who wants a faster real-time news feed than free alternatives with an audio feature for hands-free monitoring, where earnings calendars, regulatory, decision dates, and over 1,000 aggregated sources serve momentum day traders who need catalysts delivered quickly. Accepting that the April 2025 tariff incident demonstrated what happens when speed is prioritized over verification, that monthly subscriptions are non-refundable, that sponsored promotional content appears in the same feed as editorial reporting, that documented latency failures on specific event types show the speed advantage is not guaranteed, and that the top tier at nearly $2,000 a year requires the scanner and intelligence features to justify the premium over the basic tier. The basic tier is a reasonable tool for retail day traders who want faster news than free aggregators at a price that does not require justification. The founder bootstrapped the company for over a decade from Detroit before a private equity firm acquired majority control at $300 million. The regulatory record is clean. The free trial is the most generous in the series at 14 days. The options activity data is secondary to the news function and does not compete with dedicated flow platforms on depth or real-time granularity. The screener covers roughly 3,000 stocks, which is less than dedicated scanning platforms offer, but serves as a supplement to the news feed rather than a standalone tool. But the April 2025 incident is the lens through which every claim about this platform has to be examined. A news service that charges for speed published false information that moved markets and attributed the error to social media. Speed without verification is not a trading edge. It is a liability with a monthly subscription attached to it. Every choice is a trade-off. At least now you know what you're trading.